Hey guys, welcome back. Today, the memory sector decoupled. It didn't just play out. It completely stole the show today in the market. If you look at the broader market action at today's close, you see that the S&P 500, it rose a modest 0.22%. The Dow Jones Industrial Average, it added a steady 0.7%. And the NASDAQ, it barely scraped ahead with a 0.2% overall. And to the casual observer, it looks like a standard quiet Friday. But in reality, beneath the surface of those muted indexes, we are seeing a massive capital rotation that is taking place in the market. The semiconductor rally is shifting from a generic rising tide into a hyper-selective sorting mechanism. We are transitioning out of the early infrastructure phase where rising tides lifted every low-margin company. And we're entering a phase where structural scarcity, it dictates the astronomical valuations. The market is finally doing the math on multi-year contract certainty, and it's exposing a massive gap between companies that merely build commodity hardware and the true structural pillars of the AI era. Today, we need to unpack the raw trading action for the four core infrastructure plays that we follow on this channel. We're talking about Micron, SanDisk, Western Digital, and Seagate. We're going to separate the absolute tier one bottlenecks from the legacy hardware plays that are failing to capture the institutional capital right now. And then I'm going to give you my outlook as we head into the weekend, how we should play these stocks as we move towards Monday's opening bell. Guys, if you haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. I appreciate all of your support and how we're growing this community. Let's dive into the data. I want to show you an article that I saw today that got me excited for this sector. It was in the Wall Street Journal, so let me pull it up and we can walk through it together. But you can clearly see, as the header says, that AI has made memory chips more valuable than oil. Micron, SanDisk, SK Hynix, or I like to call them the memory cartel, their trillion-dollar club, they are cheap despite their valuations if long-term contracts stabilize the sector. And if I scroll down here, you can see, as the author said, that memory is now worth more than oil. Staying that way, though, will depend on how much the notorious volatile industry can make recent changes stick. If you look at the three largest memory players, Samsung, SK Hynix, and Micron, and this is the area that was kind of shocking for me to just think about it, conceptualize, that they now all carry a market cap of more than $1 trillion each. That puts them 22% above the combined market cap of the world's three most valuable oil companies, even with Saudi Aramco weighing in at its own nearly $1.8 trillion. And values have soared even further down the memory chain. Flash memory maker SanDisk has seen its market cap nearly triple since March, and it's now worth as much as PetroChina, Asia's largest oil manufacturer. So look at the graph here. You can see outside of Saudi Aramco, you have Samsung, SK Hynix, and Micron, all bigger than ExxonMobil, Chevron, PetroChina. This was just pretty startling for me when I thought about it, because you just think about oil companies having so much kind of value in the market and their valuations, their market capitalizations. The fact that the memory companies are moving beyond them now, it just shows you the demand in the market, how fundamentally strong these companies are, how much pricing power they have right now. The author went on to say, too, and I like this point, that like oil, memory chips they're widely seen as a commodity prone to violent price swings, but artificial intelligence is now driving demand for memory chips far beyond what existing suppliers can produce, which is driving up prices to previously unseen levels. Enough of those deals will recast the industry's business model in a way that will tame price volatility. Early signs of the effort are good. Micron announced the signing of its first 5-year supply agreement in its last earnings report in March. And the company said at that recent, at the JP Morgan Tech Conference, that it is making meaningful progress on similar deals with other customers. So we'll have to see what they announce for their next quarterly earnings in June 24th, I think it is. Are they going to announce more long-term deals have been secured for their company? And in its own report, it says SanDisk said 5 customers have signed long-term agreements with them, enough to cover more than a third of the company's production capacity over the next fiscal year. So when I saw this report come out from the Wall Street Journal, it was a little bit staggering at first, just because, like I said, you think of oil companies being so valued in the market and so much market cap. I mean, I think we have to realize now how much fundamentally this memory sector has shifted. And this is why we're seeing the re-rating of these companies overall. We know that hyperscalers are spending hundreds of billions of dollars on AI data centers. And as the workloads aggressively pivot from the early model training to continuous AI agents interface, the industry is going to hit a wall, and compute will be completely useless without the memory bandwidth. And this is also why we're seeing such pricing power from the memory cartel in the marketplace, because the memory makers, they purposely withheld capacity extensions after the losses that they saw in 2023, that supply glut period. And right now, the constraints in the market are probably the tightest that we've ever seen. The ultimate game changer, though, is how these companies are weaponizing their leverage. They're completely destroying the legacy spot pricing model by forcing tech platforms into these massive multi-year supply contracts. And hyperscalers are actively trading away their pricing power simply to get their guarantees to have physical silicon to deploy over the next 3 to 5 years. Future earnings for memory companies now, they're no longer volatile. They're not speculative bets. They are locked in reoccurring revenue streams. This is the pricing, the visibility that we see with these companies that is driving up valuations. It's driving up price targets from analysts, and it's driving performance in the market. So let's jump over and take a look, and just to show you what the memory titans did today in the market. Let's start with Micron. And like I said, let me pull that up first. You can see Micron had another strong day today. It was up $48 on the market, a 5% gain overall. The stock grew by 18% this week, 18.2. So today it just kind of continued to put on absolute clinic on. It gained over 5%, closed at about 972, as I mentioned. It hit a new 52-week high of 981. You can see to the right. The massive catalyst today for Micron, it's the sweeping kind of valuation, the re-rating that we're seeing, and one in particular by Susquehanna. Let me pull down and show you that to you. So it wasn't just Susquehanna, though, but this is the catalyst, because we saw Susquehanna move their price target from 600 to 1750, representing an 80% upside for where the stock trades today. We also saw D.A. Davidson, which we know has been a big bull on the street for Micron. They're the first one to put a $1,000 price target out there. They shifted their target to 1,500, almost a 55% increase from where the stock trades today. Mizuho put an 1150 price target out earlier this week, and Barclays followed up with an 1175. All significant jumps over their prior targets, and all representing significant upside from where the stock is trading today. So that was the major catalyst today for Micron. It was a big move, and the Susquehanna, like their price target checks, they're moving that way because of the average selling price for DRAM. It is completely outstripping what we're seeing in the market. It's completely outstripping the consensus models. Micron is operating in an absolute bottleneck right now, and they can currently fulfill only a fraction of their HBM demand. Their revenue trajectory is reflecting that reality, and the price targets now are reflecting that reality as well. But SanDisk also had a great day today, and they also were driven by a clear catalyst in the market. Let me pull that up. You can see SanDisk up by over $53, over 3% today. Closed at just under $16.95. If you look to the right, you can see the intraday high got up over 1,700. So this was a massive day for them. They've had a great week as well. They were up almost 11% this week, about 10.5% on the week. So it was great to see SanDisk kind of, that we knew they were coiled and ready to jump, and we had a great week overall for this stock. I think it's also driven by a new price target. Susquehanna, again, they've been very friendly to the memory players today, but you can see Susquehanna in the top line there. They moved their price target from 2,000 to 3,250, representing a 92% upside from where the stock trades today. Mizuho upgraded their price target from 1,625 to 1,825 earlier this week. We also saw Barclays move almost double their target from 1,200 to 2,300, representing a significant upside in the market as well. All of this is anchored. The core story here for SanDisk and what it's anchored on are the multi-year supply agreements that they have locked in with the hyperscalers to secure their brands. SanDisk had locked in, it's like $42 billion in revenue right now, making it one of the most insulated, fundamentally protected growth plays in the entire semiconductor space. But there was a bit of an immediate divide within the Fab Four today, because we saw the pure players like Micron and SanDisk trade really well. The advanced memory providers, kind of the high valued memory plays with DRAM, HBM, and SSD and NAND, they traded completely different from the cold storage or the hard disk drive players today with Western Digital and Seagate. So if we jump overall, you can see that Western Digital was essentially flat today. They were kind of at just a flat 0.6, I think a 6 cents down, 0.01. And Seagate was a very similar overall. You can see Seagate was a 0.92. They're down by 92 cents, a 0.1. After hours pulling back by about another 80 cents overall. The clear takeaway here for me is if you look at the scorecard for both, and both Seagate and Western Digital tell us the same thing. The technical analysis is a strong buy. The analyst sentiment is a buy. But if you look at the fair value, they just haven't been re-rated to the rate that we're seeing with Micron and we're seeing with SanDisk. We're still seeing significant kind of negative upsides for both Seagate and Western Digital. Here you can see Seagate is down by, it's like a 29% negative upside, meaning that they're trading way above their fair price in the market. We also drop down, you can see here, they're trading way above the average analyst price, not way above, but about 6% above. But Western Digital, if we jump over, similar story, trading above the fair price, trading above the analyst sentiment, the average price target. So we're just not seeing these two companies, the hard disk drives, the storage kings, being re-rated at the same pace that we are seeing with Micron and SanDisk in the market right now. I think that's causing a little bit of a decoupling, a little bit of a separation within the memory class itself. We have to keep our eye on this moving forward because, in my opinion, I still think there's a tremendous runway for these companies, but we're seeing capital rotate into Micron, into SanDisk at a significantly different rate today. I think part of it is just how it's being valued. If you look at this pyramid here, the AI memory hierarchy, you can clearly see as it lays out just kind of how they're valuing the types of memory. HBM, SRAM is at the highest. DRAM is next. You have enterprise SSD, kind of flash right there in the middle. NAND right there in the third is the context memory. And at the bottom is the cold storage of the HDD providers. This is kind of what we're seeing right now in the market. You just have this kind of tier 1, tier 2, and tier 3 plays overall. And we clearly see that Micron and SanDisk, they're breaking out to record highs right now. We're seeing kind of the capital rotate to them. We're seeing Western Digital and Seagate just kind of completely stalling today a little bit. They've had huge runs, but today capital just didn't rotate to them at the same rate that we saw with the others. And I believe it just comes down to that AI storage pyramid that I showed you. At the absolute peak of that pyramid, the tier 1 and the tier 2 that we saw are high-speed silicon. So this is Micron's HBM. It's SanDisk's ultra-dense enterprise SSDs. And when an AI agent runs an active interface model, it relies on lightning-fast KV cache offloading. To keep the GPU from stalling, the active data has to move instantly into the silicon memory. These aren't commodity components. They are highly specialized performance assets protected by long-term corporate contracts carrying massive operating margins. Conversely, if you look at the Western Digital and Seagate right now, they live primarily in that tier 3, that bulk cold storage area. Mechanical hard disk drives are great for archiving legacy data, but they completely lack the physics required for real-time AI workloads. And the mechanical platters that the drives overall are limited by physical spin speeds, and their asset-heavy manufacturing means they cannot easily scale their margins when silicon demand spikes. The market isn't making a mistake here. Capital is intentionally, it's rotating away from the legacy mechanical infrastructure and concentrating where the computational throughput actually lives in today's market. First, Micron and SanDisk, these need to be our core tier 1 and tier 2 holdings. Today's price target increases that we saw from Susquehanna and others, and the fact that they hit 52-week highs validate the thesis that multi-year contract certainty and physical silicon scarcity are winning the day in the market right now. Hold your core positions with these two assets and look to add on any macro pullbacks that we see in the market. Western Digital and Seagate are showing signs of clear technical pause because of they are structurally tied to the lower margin of mechanical storage rather than the active silicon memory. They are lagging behind this computational wave. The tactical move right now is to trim these positions on temporary strength and concentrate that capital into the pure play silicon bottlenecks where institutional order flow is heavy right now. We are separating the noise from the signal every day on this channel. make sure that you hit the subscribe button. Make sure you turn on the notifications and drop a comment below. Let me know exactly what you took away from today's market. What did you see differently? How did you see the memory sector operate overall? What were your key takeaways? What are you looking forward to as we move into the trading action next week? But guys, I hope you enjoyed the video. I look forward to you seeing the next one. Make sure